You should know how to mark your charts anywhere in the market. So it doesn't matter if you're trading for 6 months or 6 years. If you don't know this, pretty much there's a good chance you will never be a profitable trader, right? Okay, so that will be the topic of this video. I will tell you guys how to mark your structures, doesn't matter wherever you are in the market. So just to be clear, 95% of retail traders lose money in the market, less than 5 are profitable, right? Even if you follow my advice, there's a good chance you will still remain unprofitable. So let's get to the topic. I will be using the replay tool in TradingView, and I will use this random bar down here, this random bar. So when I click this will take me to a completely random time in the market. So I don't know where this is going to take me, a completely random time, and from that point, I will teach you guys how you should approach and how you should start marking your structures, right? So let's use this. So it has taken me to 2019. Doesn't matter where it takes me. Okay. So if you look at the top left side of the screen, I'm only using 2 time frames, 1 minute and 5 minute. So in this video, for this whole video, I will only be using the 5 minutes so that you guys can know. You don't need to know multi-time frame analysis. Of course, it's helpful, but you don't have to know it to be a profitable trader, right? Okay. So let's use only 5 minutes to make this as simple as possible. Okay. So the first thing you should do is completely zoom out from wherever you are in the market. So I have zoomed out completely. Let's go to the left side. So if you see, the market was clearly in a downtrend. This should be very clear. You should not be confused about these things. The market was clearly in downtrend, right? Okay. Now all you have to do is choose a random structure, right? Let's choose this structure. Let's choose this structure, right? Okay. So from this point, you can start marking your structures. So I will consider this as a downward breakout structure. Let's go here. If you see, the market is a bit messy here, but if you see clearly, we get a beautiful pullback right here. Once again, the market broke this low, took this high as an inducement, and then the market once again gave us a breakout structure, right? So let's mark this as a breakout structure. So the same thing happens once again. The market comes up, gives us a valid retracement, once again gives us a breakout structure. So the same thing once again, the market gives us a breakout structure. So only in this point, the market changed its trend from downtrend to uptrend. So let's mark this clearly because now we are changing trends. When the market broke this high, the market changed from downtrend to uptrend. So this is my structure, my current uptrend structure. So this is the point where I'll be using to mark every single structure to the right side, okay? Okay, so after breakout structure, if you see, the market gave us tiny pullbacks right here, okay? The pullback is very tiny, like this, right? So what's the next thing you can use instead of pullbacks to determine if this BOS is a strong or weak BOS? The answer is very simple. The answer is inducement, right? So if you don't know what's inducement, I have made a clear, detailed video on that. Check that one out. Just to be quick, inducement is nothing but a small liquidity grab to the left side, okay? So if you see here, the market took this high, took a beautiful inducement here, and then it gave us a breakout structure. So this is a pretty strong breakout structure to the upside. Let's go ahead and mark this. Okay, this is a pretty strong breakout structure. Now let's go here. If you see, these tiny pullbacks, these tiny breakout structure, these things amount to nothing. You should not be using this to mark structures, right? Okay, so let's go here. If you see, the market kept on following its uptrend. Okay, the market kept on following its uptrend, right? So what you have to do, you can start from marking in this point. Let's mark this structure. This is pretty weak, so I will mark this as 0. This pullback is also pretty weak, so I will mark this as 0 once again. Okay, and if you see here, the market gave us a pretty decent pullback to the downside. So you can obviously take this structure and you can start marking from this point. Okay, so now we got a beautiful pullback once again. So let's mark this structure also as a BOS. Okay, So the same thing happened once again. We got a BOS right here. So did we get any strong inducement to the left side? The answer is no. The market didn't give us any strong inducement to the left side. So this entire BOS should be considered as a weak breakout structure, right? So let's mark this one as 0. Okay. So what has happened now? The market went up, gave us a beautiful pullback to the downside, and then it gave us a BOS right here. So that's the point we are dealing with. Let's mark this as a valid breakout structure. Okay. So the same thing happened once again. The market gave us a very beautiful pullback. So yeah, if you see here, the market broke this low right here. The market broke this low right here. So the market was looking forward to change from uptrend to downtrend. But if you see closely, we did not get a break of structure. We only got a sweep. There is no candle close right here, right? You should note every single minute detail carefully when you're trading. Every single thing matters. So there is no BOS right here, only a sweep. So still the market is in uptrend. Okay. So what happens now? The market goes up. We get a BOS right here. So the market is still in uptrend, and only when this is broken, we can consider that the market has changed from uptrend to downtrend. So let's mark this and let's make this clear. So we got no BOS, so I will be marking till we get a BOS. Until then, I won't consider that this has changed from uptrend to downtrend. Okay, so this is the point where we get break of structure. So these are the things pretty much 99% of the traders will miss, right? We didn't get BOS here, no BOS here, no BOS here. BOS happen only right here. So now we are officially in downward trend. Okay. All right. So this is the point the market has given us currently. We will be trading from this point. So what's the next thing we have to do? Now we know that this is the current structure we are dealing with, right? So what's the next thing we have to do? We should take out our fibs, mark our valid 0.5 pullback level. So first I'll put my fib from right here. If you see, the market gave us a beautiful 0.5 retracement level, right? So now we will advance this 0.5 pullback from this point to this point. So let's mark this from here to this low. All right. Now we know the possibility that the market can pull back from this point to this point, right? So this is the only Fibonacci level you actually need, which is 0.5. People use 0.6, 0.7, 0.8, golden zone, all those things. They're pretty much completely useless. Okay. So I have already made a detailed video on this one also. So you can check that one out. Okay. So what's the next thing we have to focus on? The answer is our point of interest. What's the point of interest? It's obviously our order blocks, right? So we should mark every single valid order block from this structure to the left side. So let's go ahead and mark that. Okay, this order block is a valid order block. Let's mark this. I'll make this white. Okay. So if you see here, this order block is also pretty strong. And when you get candles like this, one candle is like here, one candle is like here, at this point you should choose the candle at the very top, right? So this is the strong order block compared to these two candles. Okay, nice. So we have marked our two valid order blocks in this structure. So now what we have to do? All we have to do is wait till the market goes up, mitigates any one of these two order blocks, and then hope that the market will continue its downtrend and break this low. This is the same thing that happens every single time in the market. This is like a cycle. Okay. All right. So let's fast forward and see what happens here. Okay. So the market is pulling to the upside. Okay. All right. So still the market hasn't. Okay. So if you see here, we get a break of structure to the downside. So now this will be our current structure. So this will be the structure we will be focusing on. So let's do the same process once again. Take out our fib, mark it from this high to this low. Okay, so now let's mark our valid order blocks, which is this one right here. This is the valid strong order block, and this one. Okay, all right, so now we are set and done. Let's see how the market reacts. Okay, so if you see here, the market breaks this low. So like I said, we will be considering this as C0, right? This is just a weak BOS. There is no 0 point pullback. There is no inducement. So this structure is completely irrelevant, right? So you should not trade these structures. You should not mark your order blocks right here, and you should not trade these structures. So that's the reason this structure completely got violated, right? So the market took this structure as an inducement. So if you see, let's mark that. Okay, so if you come down, the market took inducement right here, and then it again took liquidity of this low, right? We didn't get a candle close, so let's mark this as a liquidity sweep. Okay, so still these two order blocks are valid. Okay, so let's see what happens. The market has mitigated one of our order blocks, so let's wait and see what happens. All right. So, like I said, guys, this is exactly how you should trade the markets. Like you saw, I don't know what was going to happen. I just marked whatever the market threw at me, right? So let's see whether the market breaks this low. Okay. I think we are in the dead zone of the market, right? Is this December? This is November, right? Okay, that doesn't matter. Maybe we should go to the higher time frames. Okay, the market has once again mitigated on our order block. So if you see here, you would have taken two trades. One single trade right here, and you would have got a loss. And the second trade you should have placed right here. The stops can be right here. It can be like this. You would have got about 3.4 RR, and the same thing once again. You would have got about 3, at least minimum 3 RR, right? So guys, this is how you should approach and trade the markets. It's pretty simple. None of this is really complicated if you ask me. The only complicated thing you will learn when you go further down in the markets is fundamentals. But you can be a profitable trader just by following whatever I have taught to you guys in this video, right? Okay, before we end this video, let's look if the market goes to the downside. The expectation is the market should break this low. So let's wait and see what happens. Okay, so the market has once again mitigated our order block. So this is 6 a.m. Most probably we won't be taking any trades here. Okay, so this is the expectation. The market can also go up. Okay, so the market has broke this low. This will be usually where we take our take profits. So about 3.5 RR, and about this one's about 3.6 RR, right? Okay, so guys, this is how you should use whatever I have taught you guys in this video. See you soon.